Let's bring in Tim Seymour to talk a little bit more about this. He's the CIO of Seymour Asset Management and a CNBC contributor. Tim, welcome to you.
Hi, Kelly.
First of all, where do we stand on the tariff front with many of these countries? I mean, they're already caught in the cross currents of what Megan and I were just discussing. So another 10%, what does that mean?
Well, it means we have effective tax rates here that are higher than they've been since post-World War II, and they might get a lot worse. And we've got 3 deals. Maybe we know one of them's done, and the least important is Vietnam. But I think the headlines today are a reaction to a gathering over the weekend and, frankly, a group of multinationals that have met before and are looking to at least have a role in a world that is not necessarily reliant on the U.S., that is seeking trade deals away from the U.S. And, while this shouldn't be seen as acrimonious to the U.S., it is something that obviously ruffled feathers. I think for the investment strategy around investing outside the U.S., it doesn't change anything, frankly. I think the tariff profile of the rest of the world will continue to evolve over the next couple of days, and we clearly have some volatility around these announcements.
Yeah, you said you were a little surprised, though, that the dollar's rising, but half a point or percent today.
No, it's fascinating. I mean, if anything, I would think that these dynamics, while in terms of a pure theory around deficits and collecting tariffs, et cetera, would possibly improve here. I think the reality is it's all somewhat dollar weaker. And I think the trend on the weaker dollar remains. And it's not necessarily because the rest of the world's going to start selling our currency. And I think some of the fund flows around the dollar, first of all, have been more about maybe global hedging against a weaker dollar. I don't think you've seen an outright sale of U.S. assets and an outright sale of owning U.S., but I think there has been positioning to at least hedge against that. Now, at some point, I think there will be more of that. But my general view on investing globally and where we have seen outperformance is there have been a handful of important, obvious triggers to getting people's attention. But we're talking about 15 years of underperformance and fund outflows.
Exactly.
Last week, you had $5.5 billion of inflow into EM equity. And I think that's the kind of thing that you're going to continue to see, mostly because people are underweight.